all systems go for the Nairobi Securities Exchange as it plans to launch the derivatives market during the first quarter of this year. This despite a tough period at the markets that saw quite a number of companies issue profit warnings all around 2015. 2016, however, seems to be a better year, according to the NSE CEO Geoffrey Odundo, who earlier spoke to our senior reporter Mungerui for an in-depth look at the prospects of the market in 2016.
How did the NSE perform for the year 2015?
We had quite some what we call key obstacles for our business. Key among them was the capital gains tax. The capital gains tax took effect in January, and that led to a decline in terms of turnover, especially in the month of January. And this sort of had a snowballing effect to the whole year. So that impacted heavily on us. Secondly was the macro effects, the weakening shilling, the depreciation highly affected our performance. And of course the bigger challenge then was interest rates. Our market is very correlated to what happens in the money markets, also the fixed income markets. So as interest rates rise, you tend to see investors turning their attention more towards fixed interest investments as opposed to the shares. That notwithstanding, we actually did, in terms of turnover, we just had a slight decline of 2%. We closed at 209 billion in terms of trade volume, which again was slightly below the 220 we did in 2014.
What do you expect for 2016?
I'm extremely bullish on 2016, especially in the first half of the year. The capital gains tax is now repealed for stocks that are trading on the exchange, and that alone I feel will bring some momentum that had disappeared. Also the macro effects have sort of stabilized. I think the shilling has stabilized, and also the interest rates are probably within slightly just below the single digit. I think the cost of funds and cost of production will sort of decrease for most of the companies that are listed in our exchange, and that alone again will increase their levels of profitability, and that then has a spin-off effect of a good performance of the market.
Now that you're very positive, what sectors should we consider investing in if I'm interested in investing?
Let me start from agriculture. I think if you look at agriculture sector, we've experienced a very good rainfall, and we expect production to also improve. And so companies that have good exposure in export tea and coffee exports are going to perform well. Our tourism is back. Looking at what happened in December alone is very positive. The financial services for me is still going to remain one of the strongest. It's perennially the strongest. I expect to see banks perform better. And manufacturing, I mean, with the decline of the cost of funds, interest rates coming down, the cost of energy globally coming down, that again reduces the cost of production.
We've seen roads, we've seen jams. What else? Should we expect anything, and if there is, when?
Yes, this is a very interesting year for us. We're very excited about the new opportunities which we're bringing on board. Last year we got approval to commence or to launch the derivatives market, and we'll be doing that within this quarter, probably very early in this quarter. Now, what does this market do? First, it creates a new opportunity for investors. Other than the traditional stocks and bonds that we have, you now have a new instrument that you can trade on. Number two, these derivatives are mainly based on other underlying assets. Now, they tend to increase the activity on the underlying market, because investors then have an opportunity of comparing, should I buy a derivative, should I buy a spot investments, and that again creates a hyperactivity, and that for us is going to be exciting. Now, the other products we bring on board, we've already commenced the REIT. We had the first one, the Stanley Fahir REIT, which was very, in our view, a very good start, and that again we believe will encourage other REITs to come into market.
Is there anything in the commodities market?
The commodities market is something we are also working on. It's going to be like the second part of our derivatives market. Once we're able to launch the financial derivatives, we'll then be able to do commodity derivatives.
And finally, when you look at the initial public offering by IPOs, are we expecting anyone on board, and when? Also timelines?
Yes, that's been a very interesting season for us. We've gone through a pretty dry spell since I think the last IPO was the NSE, which was very successful, and just tells you there's a huge appetite for IPOs in our country. We are working very closely with the transaction advisors to sort of encourage them to bring these new issues to market. What have we done? Of interest, we have already done, or rather been able to lobby and introduce a tax exemption for introduction in the GEMS market, because we think the SME market will be a very good market for us to grow our exchange. But back to your point, we are working on three strategies. Number one, engage with government to see if we can get more parastatals to list into our markets. And we think there's opportunity. We think listing encourages good governance. We think listing creates better profile for the organization. So we believe that if we can do and bring on board more government organizations on the market, one, it will create a better profile, enhance governance, and enhance profitability. The second one is working with large corporates. We've got a couple that are in the pipeline, considering to come to the market. I think it's been the issue of timing. When investors, or rather when issuers see the markets on a decline, they tend to shy off because they would like to bring their shares to the market and immediately get a negative impact. But I think now with the turnaround and with some of the things we intend to do, we'll probably see a couple of large corporates come through. I'm afraid I cannot share those pretty private details here.
Okay. Yeah. Thank you so much, and we do wish you all the very best at the NSE. Thank you for your time.
Thank you very much. Pleasure.